Hey, what's up you guys? This is Junior Trader, and in this video, let's take a look at some critical breakages in semiconductors, chip stocks, AI stocks that we are seeing. I'll take you over a lot of these stocks in this video, but before going further, as always, none of this is any financial advice, only for education purposes, just sharing my opinion. Please do your own thing. We'll take a look at Nvidia, AMD, ARM, Broadcom, Micron, Sandisk, TSM, Intel, Seagate, and the new kid on the block, that is Cerebras. I gave my members on Patreon the levels for today, and they worked out just as how I mentioned. We'll take a look at that in this video. If all that interests you for my memberships, you will find the details in the description of this video. Now, let's start off with Nvidia. What are we looking at over here? Now, let's get one thing out of the way here first. Nvidia is still overall in the bullish structure, okay? But these are the days, these are the times that you would want a little bit size down your position. If you have technically you should be in the bullish trade. Let me show you on my tools. Nvidia structure is bullish, my friends. All right, so you should not be shorting in any way. Okay, you should be in the bullish trade, and these are the days that you got a little bit size down. Now, there are different modes on my tool, and to explain you easily here, I have the simplest mode here. My tools help beginners to advanced traders. Okay, when I show you here, I have it on easy to understand mode, but you can adjust a lot more features in my tools and accordingly tweak it to your strategy, which it comes already inbuilt with. You just have to choose which one you like, and onboarding videos teaches you all of that, how to use my tools. Okay, so details are in the description of this video. Now, the point is that we are on Nvidia in an overall pullback, and yes, a day of a cool off, but with that we have a break of a structure in the near term, losing $227 level, because there's a level marked by my tools all automatically for you. And that's the whole point. If we continue to stay below 227 area, we will remain in the multi-day weakness. That is, you can expect more continuation in the weakness as if we stay below 227 going forward. We can then potentially test 216 as well as we stay in that weakness. If we regain that level, all good. But the point is that we are in the pullback. It's not overall bearish. There are significant levels sitting over here right now, recent ones until here. Overall structure on Nvidia is just bullish overall. But when we are in the little bit of that multi-day weakness that I just showed you on the lower time frame, that's your sign. You gotta start sizing down your ongoing long position. All right. Now, let's jump on to AMD. That's all I had for Nvidia. Easy peasy, right? Okay, let's get to AMD. Now, AMD is where we do have a critical break in a way that it doesn't make it bearish, but we can expect some sideways action or cool off starts to happen on AMD. But this is the point where you should gotta start sizing down your position. We do have a break of a level 429, and then in the post market it's already at 423. Let's get to the hourly interval. Okay, now the point is that being the significant level, we starting to close already below that is this early telltale sign of the weakness. Now, it's not overall bearish. Okay, it's not overall bearish, but we are in the multi-day weakness. The bigger problem on AMD would be if we lose $401 area. That's where it's going to be a little bit of a deeper cool off. But AMD, what I think would do is it may a little bit go sideways here, maybe test the level below 401. We might see a bounce and a retest of this zone again. Again, nothing is guaranteed, but that's most likely a scenario may play out. But a bounce I expect at 400, then we'll see how much strength is in that bounce, and or if it slips a little bit lower, it may start to go for the gap fill and then give us some bounces. Point is that a little bit of weakness is coming, and this weakness may persist into next week as we stay below 430 area to 429. But if we get above that, then we are all fine. Okay. But at this point, if you have a long ongoing position, definitely take some partial profits, because there is a possibility after such an extension that a distribution phase may occur. We may spend a lot of time sideways. The reason I'm saying don't short it, because you will be frustrated, because it's just a multi-day weakness right now. Sure, you can short it. Yes, it can go down, but it's not going to happen that soon. That will go through a lot of sideways action first, and then we'll possibly see a breakage if that has to happen. That's my whole point. Shorting this early, it's just going to frustrate you. Every day you're going to see, oh, damn it, the position overnight is going against you, right? Or things like that, right? So save yourself some stress, right? And trade with the proper structure. We are a little bit in the weakness, just so you know, okay? We are there on AMD. Let's get to ARM. Now, ARM did regain $216, and then we had a follow through last day, because 216, where I mentioned that this is where this recent pullback that happened with the little bit of a multi-day weakness will complete. We did see the next day of a follow through. However, today we have lost again. This is the whole point at this. When things get into the distribution phase, when we have a double test already, right? And we are then breaking, this is your sign that we are almost, we have run up already. And if structure is breaking now, that means we are in the distribution phase. And this is the time you got to start getting out of your position, take more profits. Not, if you don't want to fully get out, that's okay. If you believe it's going to go to 500, yeah, stay with that belief, but at least take some profits. Exit out some of your position. Okay, why? Because structure is breaking. Okay, you don't want to be beating your head against the wall if price goes all the way to 175 and you would be thinking, I should have taken some profits here. I should have listened to junior trader, right? So I'm telling you, you gotta take some partial profits. Yes, you can be a long-term believer, but who's stopping you to buy it again, and you can get a cheaper price then? At least you will lock in the profits, right? Little bit, do some profits, okay? Anyways, ARM unfortunately is again in the multi-day weakness, and it's a little bit of when the third retest breaks the structure, that's where a problem is. Okay, because that tells us that's two tests are double top only if the neckline breaks. We were a little bit in the multi-day weakness, but then we bounced up. But then when the third test breaks the structure, it's a distribution phase. Okay, so anyhow, we'll still have to trade with the levels. These are just the name givens to the structures. We still have to trade with the structure, which in real time can evolve. So you have to understand the structure. 208 and 16 still remains our pivoting point. We stay below that, bias remains weaker. We get above that, we may see a comeback. Okay, but anyhow, as if we lose it, everything is not lost. We have a good support at 181, but that's the whole point. As we continue to stay below 209, we have a room to test 180. Okay, but 180, I consider we'll see a bounce there on ARM. Let's get to Broadcom. Broadcom is a slow mover. Overall structure remains still bullish. I have look at it, that zone, how nicely it held. All right, I draw, like, all significant levels are important. Okay, but the point that the reasons I highlight these areas, it's just because where the price is in the near term and where the stronger magnet is. You have to understand the structure at these levels. Okay, I highlight it to make it easier to explain and for you to understand easily. Okay, now overall structure is still bullish. We held our zone nicely, and today is seeing a pullback. So let's get to the hourly interval and identify how bad is this pullback, right? Look, we did lose significant levels in, like, when we lose two significant level, that's your sign to begin with that, okay, we are getting again in the weakness. Just like when we regain two significant level after breaking the previous one, that means we are getting in the strength. Significant level, there's one behind the yellow zone, and then we regained the second one, that was your sign that we are pushing up. But then when we lose it, then it's like, okay, multi-day weakness is beginning again. Okay, you have to understand the structure. Now Broadcom is a little bit in the weakness again, unfortunately. Overall not bearish, but in the weakness. As you can see, we broke the significant level, retested it again, rejected. My tools marks all these important levels automatically for you. If you are not trading with the levels, you are trading blind, and that's not the way to trade. Okay, my tools marks all these levels automatically for you. You don't have to worry about anything. You just wake up in the morning, open the chart you want to trade, and everything is right in front of you. All right. Now, details to my tools are in the description of this video. Okay. So now what are we doing from here? Well, as I said, it's not overall bearish, but it's a slow mover. You have to be patient on this thing. And if the structure breaks, you have to start exiting out. Broadcom until 405, 404, not too worried. If we lose that, you gotta size down more. It's not overall bearish, but it's between bearishness and multi-day weakness, where you should not have a heavy position, because we are now going through a deeper pullback, which can turn overall bearish eventually. Okay, so that's that. All right, let's get to Micron. So Micron is exactly what I told you in my last video, right? What did I tell you? Well, I told you that the level to watch was 779 to 778 area. Now, look, I may not be, when I do a follow-up video, I might be off by a few cents or $1 or so, okay? Because I'm not tracking precise price point. I'm tracking the zone, okay? It's always the zone. So you get my point though. This was the zone I told you yesterday, 779 to 779 to 778, 800, not 800, 780 around, right? This zone. We lose it, we can expect to test the zone below, right? We got very close to the next significant level below. But that was the zone. I told you, as if we break, consider it's gonna come down here. Now the point is that it's not overall bearish, but we are in the weakness. Okay, we are in the weakness. Now, this is where it becomes a bit critical. 704 can give us bounces. Micron has a room to go in the distribution phase here, but consider sizing down some of your position right now. If we lose the level below, the significant level that we are seeing below, 707 area, and we lose with 200 hours moving average. Technically, moving averages are just for reference. They are lagging indicator. You have to trade with the levels, okay? But the point is that if we lose this zone, then we are a little bit more in a deeper pullback on Micron. I do expect a bounce here, but we'll have to see the price action. Expectations and realities are different. Expectation tells us what are the zone we are focusing on and watching the price action at. That's what the levels are for. And then we see the price action at those zones because those are the magnets. That's where the highest liquidity is. And according to the price action at those zones, we make our decision. Now that's the whole point. Even though expectation is high of a bounce here, but as if we lose it, then we are in a little bit of a deeper problem on Micron. Okay, so just keep that in mind. Sandisk. Now this is the whole point. Sandisk is a little bit running ahead of other stocks in the price action. Now this is what we saw today on Sandisk, a bounce. That's what I expect on the other stocks that I just told you. Okay, so Sandisk was already doing its multi-day weakness, and today we saw a bounce. All right, and that's possibly is expected on the other stocks that I just mentioned to you, but it's a bounce right now. It's just a bounce. Strength can come back into it, as we can still regain 1440. We haven't regained that. It's a day of a bounce. Okay, now the problem is that what if we don't regain 1440? As if we stay above 1360 area, it's a distribution phase ongoing. But if we lose 1360, that's where deeper problem is. Then it's just no longer. Then we are most likely going test like 1060, 968. That hasn't happened yet. We have to lose the level for that. But my point is that its bounce has come. Let's see if it pushes above the level and goes in the distribution phase. Okay, so That's Sandisk. TSM. TSM is overall still bullish. You have to be patient on this thing, just like Broadcom, until above 388 to 389. We will be just fine. Again, it's a very, like, Broadcom and TSM are more better traded as a swing rather than multi-day. So you have to be accordingly. You still have to size in and size down the position, but just for the peace of mind, right, you have to take them as more of a swing trades here. Overall, still fun until, you know, that zone below, but yellow zone, but little bit of escape of a momentum today, losing 407. If you can regain this on next week, then all good. Otherwise, yeah, little bit, you know, it's gonna do its sideways thing, which it has been doing for what, close to half a month, more than half a month now. So Intel. Now Intel is dipping much lower. Okay, again, super extended. These things are expected. Okay, we lost a level which put us in the weakness, the significant level 115. Now if we stay below it, technically that was your sign to take profits. If we stay below it, technically we will remain in the weakness. If Intel is not regaining 115 and 30 cents area, this thing has a room to cool off more. So just be a little bit careful. Again, I still expect we will see a bounce, because these things just don't come down like that. These things usually, big cap stocks, heavy hitters, they usually retest. We haven't seen a retest. It's just the first leg down. Most likely you can reference ARM, right? Like first leg down, retest, second test. It was, and this was where, as I explained, the structure, it broke. So you have to be very careful. Again, check out how I mentioned ARM. I'm not gonna tell you again here, right? Just rewind the video if you wanna look at it. So yeah, so most likely Intel is going to do some, again, it's not guaranteed, but high probability is right there. You have to trade with the level that I just mentioned, okay? That's the whole point. Seagate. Now, Seagate is fine still, okay? It's bouncing, it's still in the bullish structure overall, not a problem. It did the little bit of a weakness, regained, bounced around. As long as it can hold above 766, it's fine. If we lose 766, well, we will test then 740 and 697, but above that it's fine. It's still very strong. Okay, so all right, let's wrap it up with Cerebras, guys. Okay, so very simply put it, as I mentioned yesterday, that it's so new, you can't do a swing on this thing, but you can do a day trade on this thing. And as I said, I'll leave it the trade plan for my members on Patreon. I did that just yesterday, and the plan was 300 below. It's a bearish trade. We 300 below, we pretty much stayed where there was a liquidity grab a little bit. Let's get to the 5 minutes, because that will give you more clarity. We did a bit of a liquidity grab above 300. This was the zone, but most of it, as you can see from the time market open, let me actually mark the line here, even though the line is there, but I just wanted to have a brighter line so that I can show you. So we stayed below it, and then there was a bit of a liquidity grab, which is understandable. But the point is that, let me turn on another tool that you can use on all the stocks, even on the new stock. Okay, we stayed below the cloud. Okay, and the rolling clouds, and you can see the structure remained red when the market opened. I'm on the passive mode, just so you know. Okay, and then we kept hitting that ceiling of $300. As you can see, we kept rejecting here. It's just a bit of a liquidity grab, but we never went above the cloud. So, and that was the level, 300 below, bearishness. And if you're day trading Cerebras, juicy price action right now, because it's a new stock, it's in the price discovery mode, but a lot of order fills and very nice moves right now. And yeah, so anyways, options also good right now. So anyhow, it is in the bearish structure right now. It's still not a swing trade. It can still bounce around. And again, I'll talk about the trade plan with my members on 25 plus stocks coverage. Cerebras is now part of that as well. So I think we are at 30 plus stocks. Over the weekend, I'll provide my member members the plan on Cerebras as well, with together with other 30+ stocks. If you're interested, you can join the memberships from the description of this video. And that's all I had for you in this video, guys. With that, I'll see you in my next video. Take care. Bye.